Okay, we should be good to go. Wow, mess up my first sentence. Good start to the stream. Can't speak English. How's everyone doing? Good evening. Let me know if the screen is reasonably clear, as is my voice. Those things are kind of necessary to make this somewhat worthwhile. Then we'll get going. Nice to see familiar faces, as ever. Hope you're all doing well. The regulars, you know who you are. New people, welcome as well. Milis, yes, I've been back home for like a couple months now, a month and a half. I don't know, time is a construct. But yeah, gratefully, I am at the battle station. Richard, Paul, Rob, Freeride, Livu, Dixie Enormous, of course. Video okay, audio okay. Nice. Nice. Cred face cam working well? Yeah, I'm glad it's working well. That's something I might consult with you guys and girls with regard to stream quality to some extent. I personally don't have an issue per se of using a face cam for these things, but there's something about it which just strikes me as scammy. And when I watch all these crypto YouTube channels with some good exceptions, but like the weight of the evidence would suggest when these people like get on camera and get all cringe and personal and try to be your friend, something repels me from doing that. So if you want the face cam for whatever reason, and if there's enough demand, I'll oblige. I've posted what I look like before on Twitter, nothing interesting, totally forgettable. But something just doesn't sit well with me. Trader Z, how you doing, mate? You do it with your top off, then it's all good? Yeah, that's for the paying clients. That's for the paying clients. Looking for the dump that have been promised. Can't short, can't long, only pain. That's an interesting one, and it's something we discussed on Friday. So even if you're not actively catching longs on this, for the most part, I imagine most participants in the space are net long Bitcoin by virtue of their crypto exposure. And I think you need to have a really strong or short-term view on the market to have no exposure to Bitcoin whatsoever. Even the guys on Twitter who trade with Bitcoin as collateral and kind of coin margin futures, etc., when they hedge their entire exposure with a 1x short on an inverse futures contract, those guys still have cold storage that's, comprises or forms a net long or whatever, spot long position. So to be in a position where you're just watching this in pain, I think it takes quite a unique set of circumstances to be there. So with regard to missing long setups, I mean, trust me, I know what that's like. And my system still, as much as I talk about momentum, continuation, etc., that's not the bulk of my trading. And we're actually going to cover a missed trade setup that happened earlier today, preceding this breakout. But yeah, for the most part, unless you have either short-term or very strong views, missing all the upside in any form, like you have no spot long exposure, fully hedged with what you've got, etc., that's some, I don't know, pretty unique positioning for where we are right now. Avishai says, agree, technically net long, but not hardly enough. Well, that's another concern with regard to bet size, position size, how much of your investment stack are you trading, etc. Anyway, lots to talk about already. Let's get into the intro first. First things first, thank you to Bybit for sponsoring Technical Roundup. Quite literally couldn't do this without them. Very grateful for their support for what seems like months now, and it has been months. Hopefully you've been enjoying the content we've been able to provide as a result of our partnership. If you want to support the stream, make sure to click the links in the description, check out Bybit, and we'd be very grateful for any interaction there. So thank you to them, and thank you to you for making this possible as well. Final thing, leave a like on the video, even if you're not going to sit through the whole way. Clicking that thumbs up button does a whole lot for us, and as always, grateful for all the support that we get during, after, and even before the live streams have started, in some cases. And I swear the final point, TechnicalRoundup.com for our weekly newsletter with Donald. If you just want the charts, the levels, and, the less engaging, entertaining side and the more technical stuff, if you're just there for the charts, it's perfect. And that's also free, courtesy of Bybit. be sure to check that out, where we look at Bitcoin, ETH, alt BTC pairs, sometimes throw in some extras. So that would be awesome. Thank you very much. Okay, so let's get into it. One of the things, I thought it might be a good idea for the stream to at least from time to time have some sort of talking point or some material to go over, as opposed to just jumping straight into the charts, right? So today's topic of attention is this Bloomberg article. You can see that because I am poor, I do not have some institutional amazing subscription, Bloomberg, whatever. So I was just lucky to be able to get this article for free, essentially. But the title is Bitcoin is gunning for a record and no one is talking about it. This is an important point. It's worth remembering that, you know, by virtue of our exposure to Twitter and other platforms, etc., we've essentially created an echo chamber of people who really care about this instrument, this asset class, and just everything that goes on. And that's not necessarily, or most likely by definition, not reflective of kind of global eyes on it as a whole. So there are some interesting points made here with regard to, no matter, you know, despite the proximity to all-time highs, that the same level of interest hasn't yet kind of caught up, which is a good thing, right? So if we look at some of the things, or some of the arguments made by sorts of researchers and fund managers and all these sorts of fun, relevant people. So the fascination has worn off, according to Kathy Jones, hasn't expanded because of volatility, and you have so many questions about security and what regulations might do. The number of questions I get is a fraction of what I got a couple of years ago when it was really hot, which is, again, quite bizarre given how close we are to 2017 highs. You know, other arguments making the same, or other people making the same points, kind of in the shadows, according to Bryce. What else we got? This is an argument I find very bizarre, many of whom suffered through Bitcoin's 2018 crash. So you'll often see the argument made that people won't be as bullish X asset class because they've seen how much it can crash in the past. I think there is some truth to that. And you can see that especially in altcoin, Bitcoin market cycles, where even when you get a new hype cycle, because it got wrecked so hard and there's a bunch of bag holders left, them selling on the way up and getting their break-even or slightly profitable exit, and the requirement for new buyers at those old highs, which simply isn't there, there is a mechanism by which seeing or experiencing pain in a market previously can sort of create this selling pressure around old highs, and that's why a lot of altcoin charts, especially the older ones, kind of look like this, right? You kind of get the crazy blow off, then it kind of cycles again, you get a lower high, and you know, that sort of thing. So that's understandable. There is that mechanism. But my view is there is an exception to this. And one, it's new stuff, right? We've seen that the new altcoins aren't at all affected because by definition they don't have any new bag holders. So that's good for the ecosystem as a whole. But the second argument with regard to this, well, people have been wrecked, so it's not as bullish. I think at a certain point, greed just takes over. Unless it's these, again, altcoins where it's not just people being wrecked, but also no one really cares about those old altcoins. If you have A, novelty, and B, just the kind of momentum and velocity that baits greed into the market, and you kind of lose your common sense, like, oh, I've seen this before, and you just see it go up like 10% every day. I think those two things, in the appropriate circumstances, at least refute or mitigate this whole thing of, oh, well, it's crashed before, so I'm going to be careful. Like, at a certain point, you're like, fuck this thing is flying, and I'm getting involved, and if I get burned again, I'll just cut my losses earlier than last time, right? This whole argument of individuals, people that got burned badly. I don't know if you agree, and, you know, the gentleman seems to concede the argument at some point, saying that could change for breaks above 2017 highs. I'm very much inclined to agree, and I think even before that, if a market starts moving outstandingly enough, the whole argument of, oh, well, it's gone down before, really starts to lose force and evaporate, in my opinion. This metric was pretty interesting. The total number of tweets that mentioned Bitcoin on a daily basis, at the height, it was 120k. Now it's between 30 and 60. So on the higher part of the range, 50%, which is pretty impressive, or surprising, at least, with regard to where Twitter and Bitcoin mentions are at. But yeah, so one, we've addressed the argument of, you know, now that it's a more well-developed ecosystem, people have more experience, they've seen it go up, seen it crash, people are going to be more careful. I think there are good reasons to doubt that argument, especially as we approach all-time highs. And the second point I want to make, if we take the conclusions, broadly speaking, of the article at face value, that's generally, I think, quite positive for a trend. This sort of absence of widespread mania means, usually, at least, fundamentals wise, that there is some room left to go. And when you start getting the normies, the people down the pub, the cab drivers, everyone's into Bitcoin, Coinbase #1 app on the App Store like it was in 2017, once those sorts of widespread indicators start going off, that's when you know that perhaps there's trouble in paradise around the corner. But as long as no one gives a shit, signs of a top will more likely and with higher probability emerge when more people do give a shit, is my very polite way of articulating that. Was that interesting? Just talking about something which isn't a chart? If it is, let me know. We'll do more of it if there's something relevant. If not, then we won't do it. Cornholio says CNBC and Citibank shilling, Superman is back, all that not sign of a near top. Look, it's very hard to say, right? It's hard to say because it depends which indicators you use as your kind of red flags. And there have been many indicators on the way up, kind of 12K, 13K, 14K, and even way before current prices. Old people coming back and certain tweets and bullish predictions and people who were really wrong previously making a reappearance. It's really hard to choose the right ones to be counter indicators, so to speak. So I don't know. I think there's a kind of selection bias that comes with that. But I agree that widespread attention isn't necessarily the best news forever. It's a fantastic short-term catalyst, medium-term catalyst, etc. But at a certain point, markets don't top on bad news. Like, bad news doesn't really tend to be trend reversing in that sort of way. The blow off top, euphoria, inverse capitulation, whatever you want to call it, usually happens or forms around good news, not bad news. And 2017 is a good example of that. The argument of CME listed Bitcoin futures. You could still, the thing is, like, crypto Twitter was still active at the end of 2017, right? So you can literally go back, like, sort of in the archives type of exercise and look at the type of tweets that were permeating the platform around that time. And, we were at 20K, and when futures listed, that was seen as a kind of bullish institutional adoption type of argument. And you were getting price predictions of kind of 50K, a kind of doubling in price within a month, and all sorts. And of course, as we know, Bitcoin topped the day that futures went live. So, yeah. And I'm glad you enjoyed the small kind of news coverage. If you did, like the video. As always, we're almost at 100 likes. It'd be very much appreciated to get us over that psychological resistance level. One other thing I want to talk about is my kind of trade setup, which I've had a couple of questions about. One to be specific, but I thought it's worth mentioning. I've got 3 monitors at the moment. I might get a 4th one, but I haven't had a pressing need for it yet. And the way my kind of trading station setup works is the monitors are positioned thusly. I've got 2 side by side, and they are the same size, just my drawing isn't, and one kind of on top. Okay, so if I'm in a trading session, this front, so I'm sat sort of more towards this monitor, let's say in the middle, for example's sake, but this one's kind of facing inwards, and this one is straight, so I'm roughly here. Okay, so the front monitor will have my exchange, right? Well, where I'm actually trading and executing orders, pulling orders, managing the trade, etc. And then really, what happens on the top one is I've got my high time frame chart template, which I'll show you in a moment, right? And on the right side of the screen, I'll have my lower time frame chart template. And that's pretty much it. I have a couple of other tabs open, like maybe Aga Trade to see big orders coming through, etc., etc. But for the most part, the important stuff is as follows. So actual trading station directly kind of head on. Above that, when I look up, it's the kind of high time frame chart layout and template, which I'll show you in a moment. This kind of gives me higher time frame perspective of where we're at, so I don't lose sight of where the market is more generally, and then more likely for the intraday trades and stuff where I'm actually, the structures that I'm using to trade, the levels and stuff like daily opens, weekly opens, all that type of stuff is on a lower time frame template. So that's kind of how it looks. Okay. Twitter, if I'm in the middle of a session or in a trade or managing something which I think is important, I usually don't have Twitter open unless it's on my phone. But yeah. Will sometimes multiple charts for different things to trade, but it's not that common, honestly, not that common. Let me see if I missed any other good questions. Jeff says, how does this run up compared to December 2017? A lot more chilled, far less manic. I think it's because we've seen these prices previously for now. Pretty, yeah, relaxed, I'd say. As for retail, whales, institutions, bots, etc., I'd say much more skewed towards the kind of professional spot buying class rather than the gambling retail class, which is a good thing because those people's time horizons are much longer and less likely to get rinsed as well, I think. Are you using a pen with tablet for drawing or a mouse? I'm using a mouse. Okay. The tool I use is called Lightshot. People who are wondering about that, the screenshot tool that I use to squiggle with is called Lightshot. So I talked about those chart templates, the higher time frame one and the lower time frame one. We can look at them now. One of them is here called Mega High Time Frame Chart, whatever. And this is what that looks like. And again, I've only really got monthly and weekly levels on here. I don't even have daily levels because they're kind of too low time frame for this. And I'll just use this chart template to give me a more or less informed bird's eye or kind of quick glance view as to where the market is right now. Okay, so kind of that's what that looks like. If you want a higher time frame roadmap, I suppose this is at least my version of it, or my kind of reasonable candidate for that position. You see your monthlies, weeklies, potentially quarterlies, and that's about it. So with regard to where the market is right now, just looking at the weekly time frame and the monthlies, etc., purely technically speaking, it's within an area of resistance, not an amazing one. As we've discussed on Casual Friday, for me, the really kind of A+ structure, where there was a lot of volume traded, a lot of price history to deal with, and areas which have proven themselves as significant, that was closer to kind of 11 to 12k area. There's kind of a lot going on, a lot of candle bodies, a lot of high time frame candle structure, weekly levels that overlapped with monthly levels, like everything you could ask for a kind of high time frame swing trading template. 11, anywhere from kind of 10 to 12k, if we're talking the upper range boundaries, kind of past the breakout point. That's where that structure was. Beyond that, just looking at the monthly time frame, you kind of have clear skies and not much structure. Like I use candle bodies for the most part as levels, reference points, etc. And even going off of, aside from arguably 13.8, and again, unlike, if we just make that comparison, the one I just made, where we are now relative to structure as opposed to where we were, if we just look at those two areas, you can see they're not really comparable, right? In terms of structure, yeah, you've got this highest close, you've got like a rogue wick here with virtually no time traded in this area at all. This was a very aggressive and fast moving top that just literally slid down. There was, no real volume transacted at that level. And in a similar vein, when we came to retest it, this was kind of really the first test of that structure, not counting this rogue swing high. And if you compare that to 10, 12k, that upper boundary we talked about, you can see the difference of all these retests, candle bodies, and just a lot of volume being traded. So that's why on the 11.5k, 12k breakout, the argument was, yeah, you've got monthly resistance, right? Definitely worth being aware of, and we'll explore what that means given how far we've traveled in a moment. But really, if the bears were going to step in convincingly, the better or the best area to do so was at 11.5, 12k, etc. And now that we've penetrated monthly resistance and dealing with this void, it's a lot harder, in my opinion, to push things around, okay? But that also means, of course, conversely, that if we come towards some sort of high time frame retest, we've got a lot of room to fill, theoretically, before we start reaching some reasonably reliable structures. So where's the market right now? I would call this a kind of a low conviction area of resistance. You could arguably just ignore this swing high. It's kind of anomalous. I've left it there as the extreme, but I don't generally derive support resistance from singular wicks. So for me, the candle body, the top, the highest close within the breakdown range, that's kind of the last reasonable level or even reference point that I think matters up here. So that lands at around 16.1. So where is the market like right now at the time of recording this video? Well, it's in an area of low conviction resistance. Is kind of the only way I can really describe it. Technically, for those interested in my own trading bias, etc., I'm allowed to look for short setups this week on lower time frames, like on the daily, for example. And the reason for that is a test and a close below this red line having swung or poked above previous week's high. Typically, when I get this type of candle close and that type of context at resistance, that kind of opens the door towards looking or green lighting sell setups on lower time frames. So in that case, being conservative, if it's a weekly close at resistance, I'd need to see something on the daily time frame to allow me to sell this. And as we'll visit in a moment, there's just no evidence at the moment of weakness in this market that would allow me to take that setup. And I think there's something to be learned there from a kind of trend following perspective. Generally, especially when the trend is quite apparent, it makes sense to have a framework which tells you that the trend is intact until it isn't, as long as the until it isn't criterion is clear, well-defined, identifiable, actionable, whichever convenient adjectives you want to use. As long as it's something you can grab onto eventually, that's really kind of good enough. And that's been the view in the newsletter as well. Yes, monthly close, technically at resistance, etc. But number go up until proven otherwise. What does proven otherwise mean? Well, at the very least, if everything is flying, you want to see daily evidence of weakness or a break in market structure or loss of support or something. And as we'll cover in a moment, there's just been no sign of any weakness on the daily time frame. So the presumption has been up until something drastic happens. And that simply hasn't happened yet. So yeah, with this high time frame chart, that's kind of how I'm placing where the market is right now. General area of low conviction resistance at 16.1, 16.2. The extreme of that lands at 17.1. But if we trade through here, I'd expect that to be a decent candidate for potentially a short-term blow off top and for price to really accelerate through the swing point before maybe settling and entering a period of lower volatility. I don't have any amazing reason to think so, just kind of shooting the shit and spitballing. In terms of any high time frame pullbacks, if we get, for example, that daily time frame weakness or even weekly time frame weakness, which would suggest a pullback, because again, we are 1, 2, 3, 4, 5, 6. This would be the 7th green week in a row. When that's happened in the past, 1, 2, 3, 4, 5, 6. You can see the 7th week was an acceleration. So this could perhaps be our acceleration week towards this, I think, June. Am I wrong? So yeah, that's much earlier than that. Basically, this 2017 or 2018 swing high at 17.1, but it remains to be seen. Nonetheless, if one way or another, whether it's at this level or it fails back below 16.1, if in some form there is evidence of a weekly red candle, which sounds like some extinct animal, given how the current chart looks like, but if that type of evidence emerges, well, first of all, I'll obviously try to let you know my argument for that, because there isn't one at the moment, but if it does, the benefit of using this kind of high time frame template is it tells me areas to ignore and areas to pay attention. So if for some reason I have a reason, I know that sounds absurd, to anticipate or act on a pullback in this area, my first trouble area for such a position on a high time frame view, as usual with no guarantees, would be 13.8 or this 14k untested since it's been broken as resistance monthly level. Okay. One point I want to preemptively address is like, oh, well, there's no resistance on the way up, or these levels aren't relevant, they're too old, etc. I think you can argue both, which sounds a bit silly, but you can at the same time maintain that there are levels that are useful reference points above market, and two, these levels aren't necessarily good resistance, but they may be good future support, right? So I think those two statements are generally consistent, or you can maintain both. So even if you think that, for example, and I don't want to get ahead of ourselves, but theoretically you think 16.1 is absolutely trash resistance, and you think that, you know, price is going to trade to the next swing high, which is 17.1, reasonable view. But then if the market starts to pull back, and you're a participant on either higher timeframes, lower timeframes, trying to catch that impulse, which, you know, jokes aside, is another kind of $1,000 move, obviously smaller in percentage terms, but still something to be captured there, you're still going to need some sort of reference point as to where to buy a dip, what to do, etc., if levels matter to you at all. So even if something isn't good resistance, or you don't think it's going to do its job or stop a trend, it still has value as a place to position alongside the trend, right? So kind of on the way up, if you think resistance is going to get melted, well, just treat resistance as something to be flipped as support in the future. Or, inversely, on the way down, if the trend is bearish and you think this support is shit, well, just use it not as support, but as a rally to sell into in the future. So these levels are still useful, even if they don't fulfill their primary role necessarily. So that's why I still have some reference points despite our proximity to all-time high. Does that argument make sense to anyone at all? It does to Callow, apparently, and Harvey. Okay, good. Okay, good. Paper Trader says, do you chart Bitcoin always on the same exchange chart? Do you change the charts regularly? No, for the most part, I keep my templates as they are. And then I also use the chart that my exchange provides for obviously moving around orders and stuff like that. So that's the weekly time frame. And again, in terms of the absence of absence of weakness on the daily time frame, what are some stuff that indicate, what are some things, I really can't speak English today, my apologies, what are some things that may indicate kind of slowdown in a trend or weakness in the trend, let alone reversal? Well, one, the SR flip failure, right? When you have a breakout in an uptrend and it pulls back to a level of what should be support and it fails, that's what that is, and that's generally suggestive of at least short-term exhaustion or a slightly deeper dip. Okay, what are some other things we can look at? Well, market structure, right? Market structure break. So in this case, that will be a lower low on the daily time frame, either on a close or on a wick. That simply hasn't happened on the way up whatsoever, right? All the swing lows and all the lowest low closes have held, so no evidence of that. And three, and I guess this kind of relates to one, but is slightly different in form, pretty much loss of support, right? You break support, and that's kind of related to as well, it kind of ties all these things together. Make a lower low, or break a structure, re-flip a level, or fake out above resistance, whatever you want to call it. That is also, again, actionable, or to some extent a sign of a short-term top. And I'm sure there are many more, and you can rephrase these into a million different ways, but for the most part, we're looking for something bearish in what we know from our technical analysis tools, and that just currently doesn't exist on the daily time frame. At least I see no evidence that, for me, would be actionable. But again, it's worth being aware of what that may look like, and there's always a spectrum with regard to how aggressive or how conservative do you want to be with these things. I think if you want to be aggressive, we put in a daily swing low here, right? I can't get this straight. There we go. Put in a daily swing low here before breaking through this weekly level. So if that structure were to fail and we'd make a lower low and lower low close at that point, having then traded significantly above the weekly level, I could be reasonably comfortable with an argument that this was the overextension through weekly structure. We now have a breakdown on the daily time frame at weekly resistance, and then that could reasonably turn into a pullback trade towards old lowest closes, or again, as discussed on the high time frame chart, the higher time frame targets. Okay, so again, additional context, not only would this type of event be a market structure break on the daily time frame, something that hasn't happened on the way up, but the context would also accompany or complement the idea of a pullback, because we will have traded into weekly resistance. That's kind of aggressive. I'm not really sure what that would look like. And of course, the immediate concern there is that if you get short a setup like this, you're arguably being short into the retest of the old consolidation. So if the market is really bullish, what you'll see is time frames kind of invert. So normally you'll have a weekly resistance, right? Weekly resistance. It would take a market to, let's say, weekly support, and in the process, it would break a daily level, right? Just as an example, and break also intraday levels. But this is kind of time frame hierarchy. If the market's going to move from one level to the next convincingly, it'll move from weekly to weekly, and as a result, or necessarily, lower time frame levels like the daily will be broken, right? The issue with a strong trend is that the rules kind of bend if the market is really bullish. So even if you get a test and a reaction from weekly resistance, if the market's really bullish, the most you might be able to get is a test of daily support with intraday levels being broken, for example. So it's kind of tailoring your expectations. So the risk and what makes it, from a trade planning standpoint, what makes this opportunity slightly unattractive, potentially, and again, I wish I had a crystal ball to tell you exactly if, when, or how that would look like, but I don't, and, you know, strong opinions loosely held around here. But taking this model, if you will, into mind, the risk, or what makes it difficult to plan, is that you may end up catching just a small move into a retest of daily structure, and that could be enough for trend continuation, whereas you might have been looking much lower. So that's why that setup, the daily market structure break off of the most recent swing low, is considered aggressive in my book. What would be more conservative? For me, I think a lower low close through the first low made after breaking the monthly level. Again, context is really important. You see, we're not just looking at market structure, random highs and lows. We always add context by saying, when did this low form? Did it form, so in this case, when did market structure break? Okay, it broke after testing high time frame resistance. That gives us extra confidence. Or why is this low particularly significant compared to others? Well, this was the first pullback after we closed and broke above a monthly level. Okay, maybe we should pay more attention to the participants who stepped in on the breakout of monthly structure. So it's not just about levels and market structure. At least in my approach, it's kind of a bit more investigative, and you build a picture and build a hierarchy based on what's around you. So going back to the point, what would be a more conservative type of pullback scenario? I think a lower low close through here, the kind of 14.89, 15k level, something like that. At that point, I think it's likely that rallies would be sold, and we'd be pretty close to the high time frame monthly magnet all the way down at 13.8k. But until either of those scenarios take place, and in the absence of those scenarios, I really have no good reason to be bearish or trade in one direction, or in the bearish direction rather, because again, total absence of evidence for now of stuff that would make me want to do that. Again, strong opinions loosely held. If we get some sort of crazy overextension, blow off top through this weekly extreme swing high, there might be a scalp basically from A to B, something like that. Again, I can't tell the future, just what's available to me right now. Does that make sense so far? Is that a helpful framework? Do you see what I mean by piecing together a picture based on market structure and levels and all that kind of stuff? If it is, also leave a like on the video. Your feedback means a lot with regard to these long explanations. And also, this is something we discussed to some extent in that video on the channel, which is 14k resistance. I don't know if anyone remembers that. But we basically said, yeah, there's monthly 13.8k, but really we can expect arguably a wick higher at, and our levels were 15k midpoint, 16k range high. So, you know, there was no real reason to go all in short monthly resistance 14k. There was no confluence, didn't really spend much time there, and it was quite reasonable for price to wick higher and maybe just not wick and teleport through it as a whole, right? Let me see the questions. We will look at YFI, Richard. I agree, it's quite telling. Quit the drive dog. Tell us what the top is. I don't know, Matt. We will look at Litecoin. I think there's some PayPal theories that may be relevant there. Connor, will the break of all-time high be a non-event? I don't think so. I think just purely psychologically and in terms of what the chart would look like and all those factors put together, kind of validation for Bitcoin, whatever you want to call it, I do think all-time high carries much more metaphysical weight than other price levels by definition. Non-related question, just curious, what's your formal education? I graduated with a BA in technical analysis from Peter Brandt College. I then got my master's degree in trading levels at Tom Dante University. I'm currently doing my PhD in offside trading at Donald School for Mechanical Engineers. I don't normally flex my formal education, but if you ask, I have to, you know, present myself as credible. It seems everyone is waiting for a pullback to buy. Without derivatives-driven market and noobs, I can't see it happen. What do you think, Cred? I certainly think if derivatives don't pick up, and we don't have the same... Yeah, I mean, if derivative participation is significantly lower, and we have a spot-led and spot-bid rally, and all this institutional interest as well, I think generally pullbacks will be shallower, because those guys really like to act on dips, but I don't think it rules out the market ever correcting. I don't think it somehow makes us immune from market cycles, corrections, profit taking, whatever it may be. We might have to adjust our expectations, but I don't think it's a new paradigm where we go up forever. But where that pullback takes place, God knows, right? God knows. Which is why I'm trying to just be chill about it and keep an evidence-based mind towards it. If I see evidence of a pullback that meets my criteria that I outlined, I'll act on it. If I don't, I'll stay long and strong, I guess. Посмотрим, умеет ли он до сих пор читать по-русски. Да, умеет. Спасибо за вопрос. Нихуя себе. Экзамен сдаю на своем же потоке. Right. So, the only other thing I've got to say for Bitcoin is regarding the missed trade, which was a missed long setup that I took, or didn't take, rather. And it was based on this structure here. Let me take a look. So it was this level of market structure. This lowest close, which I just boxed out the whole candle. And so we're at the weekly level. We poke above it, break below it, and then this type of stuff, if I were in a short trade, this is kind of where I'd be bricking myself. So you technically have like an amazing bearish soup, right? You've got the overthrow at a high time frame level. You've got the break in market structure where you've got like the lowest close here, and then you've got the lower low here, okay? And then you're retesting the weekly level and whatever, I think this is the daily open at the time, as resistance. But look, you have the first test here, another bearish candle, another one, like all these tall wick candles, but look what market structure is doing. You can't even break, oh sorry, I think there's like a retest level back here. You can't even break local intraday support when you're coming off of a retest of a weekly level as resistance. So I was like, right, I don't want to sell this, and I think people who are going to sell this are going to get squeezed. I want to get long once they eat a plate, right? And so the market pushes up, closes above that level. All the positions taken on this bearish retest are now sweating, and I wanted to get on board a pullback and get something like this on board, specifically within the red box. And as you can see, even if I had a limit order, which wasn't my plan, but even if I did, that most likely would have missed. Haven't checked with my exact data feed that I use, but I was looking for a kind of price action based entry, ideally towards the bottom boundary. The basic structure being bearish retest that hasn't worked out. Boom. As we know from the live streams, good bearish setups that fail are bullish. I wanted to catch the backside of it and didn't. So that's the kind of fun missed trade. How many years did you live in England to speak such good British English without any Russian accent? Gosh, 3, 4 years. His English is more like an American English. It's so strange. I don't think you're correct, Дима. Не пизди. Нет такого. Американский английский. Ты чё? Совсем не так. Yeah, I agree, 5 a.m. I agree. Okay, so that's kind of Bitcoin, and that's kind of the most I can offer you. The only other fun bit that I've got based on my lower time frame template, it is a pattern that really takes me back to 2017. And it's the idea of these running wedges. And again, technically it hasn't resolved yet because hourly close, blah, blah, blah. But what you'd have all the time, like on the run up in 2017, just like always, people were looking for a pullback or to short the trend or do whatever it may be. You have a rising wedge type of structure. You know, price would behave and in a way that respected the wedge boundaries. And then when it'd come in, usually the third test here, and you'd normally have some sort of RSI divergence going on as well, you'd have a shit ton of bearishness, understandably, right, at the resistance of the wedge, and you'd see like 20 of the same charts posted within 10 minutes. And of course, then what Bitcoin would do in quintessential Bitcoin fashion was something like this. A running wedge, which would then obviously then continue in such a fashion. So that's what made me laugh. I think Edward Murata posted this structure with regard to a running wedge, etc. This is the only level of, and I even put in dotted lines because I don't give it a lot of weight, resistance that I've got around here, and it's just this running wedge structure, and it just reminded me of 2017. I don't typically trade off of structures like these so far away from high time frame levels, but yeah, it's just a potentially useful reference point. Sushi Lover, I don't know where the top is. It's one of those things where I'm going to take enough profit on the way up to be comfortable, and then once I see evidence of weakness emerge on the time frame that I need them to emerge, I will act on it. Hi Alex, how you doing, mate? How old am I? I am 23. says, is it worth aiming for the bottom of the box for entry given that buying has been so aggressive? No is the answer there. No. But I was looking for a price action entry either way, so I'd have no qualms with taking an entry at the top boundary, even if it, say, wicked the bottom boundary. It's not like give me the bottom fill or nothing, but it just didn't hit the structure I was looking for whatsoever. So that was something to deal with. And again, my exposure at the moment, I am net long by virtue of my spot exposure. I normally get locked out of parabolic rallies from a leveraged point of view, because again, momentum continuation, something I keep working on, but just isn't my strong suit with these things. And I paid myself and sold some spot at around 15.2. So yeah, that's kind of me. Rolling with it until I get some red flags. That's how I can summarize it. Just rolling with the trend until red flags come to fruition. And if they don't, then they don't. That's Bitcoin. Chat, sentiment check. Is this retest gonna hold? Yes, hold, no, fail, and we nuke. Yes or no, chat? I'm 23 years old. Oh, I absolutely do not regret taking profit at 15.2. No, not at all. We'll see. That's it. For the next hour, we're just going to sit here and watch the 1 minute time frame, okay? I was joking, by the way. So yeah, that's Bitcoin, the best I can offer you there. Let me bring back my template very quickly so we can take a look at Ethereum and then some other stuff and altcoins and stuff. Stuff. Speaking English is difficult. Ждем биток. Yeah, согласен. So what does my ETH high time frame chart look like? It looks a bit like this on the weekly time frame. Not the cleanest in the world, but here we are. And again, whenever I trade high time frames or I look for swing positions, Papa Dad, can you talk about your buying the top trade a few weeks back? Yeah, it was actually a fantastic trade. I'm joking. It's a trade I would take again, though. It is a trade I would take again. It's very weird when I kind of get tongue-in-cheek trolled about one, like, wrong positioning from weeks and weeks ago, despite me telling people to buy 4,800 when really no one else was. But it doesn't matter. I can happily talk about that trade. I have no qualms at these things. I'm my harshest critic. Believe me, when it comes to trading, that sounds Trumpian, believe me. But I am my harshest critic when it comes to my trade execution. So I don't know, for those witty people in the chat thinking they can, you know, have some sort of impact by bringing up losing trades, I will happily go over them, and trust me, the impact isn't what you think it is. The idea was pretty straightforward. We have a monthly and all sorts of important high time frame structure coming off of this low under 400. Acted as resistance, we had a really clean breakout, right? And I bought the retest of that level at 392, I think, was my entry. I bought 392, and I was really looking for a range play, so from the lowest close towards the highest close. That didn't work out. The market sold off from the 390s, and my exit, which I again tweeted, was at 387, I think. So out for a scratch, essentially. After fees, etc., I think it was minus 0.2 R or something. So if you'd like to come into my chat and castigate me over a 0.2 R loss that took place weeks ago, you are more than welcome to do so, but I may humbly suggest there are better uses of your time and mine also. But for those who are in good faith interested in what that idea was, Bitcoin at sort of 12k and similar trade, ETH at 392. For ETH, it was this retest, which looked really good. And I would take that setup again, and you can see it was just the trade was a bit early because the same level was used as support before this impulse. So that was a timing thing. As for the Bitcoin entry at 11,920, I think, at the previous highs, that setup was pretty straightforward as well. Again, aggressive early, not the type of trade I'd usually take. And my mistake there was ETH was leading, and I was just playing Bitcoin hoping it would catch up, which is something I learned not to do. The basic idea there was there was resistance in the market. Wait, was it here? I think, gosh, I don't remember. Hold on. I think I know what it was. Yeah, the basic idea was you had this level of resistance, right? Level of structure, you had the fake out above it, resistance, fell down, etc. So my idea was if we reclaim the original level of resistance, that would be a ton of fuel to go towards this high, which is usually the fake out high isn't really good resistance, and the levels that matter are much higher. So the basic idea was the reclaim of the breakout level, right? And so I took that around here, and it was wrong. So again, the fact that I can remember the setup and give you the logic like immediately shows you that it wasn't a punt. There was some thinking there, and it just didn't work out. There you go. Hope that answers your question, Papa, Dad. Not sure if it was in good faith or not, but I will of course give you the benefit of the doubt. Thank you for being here. I will talk about winning trades, I'll talk about losing trades, I'll talk about missed trades. I really, really don't care. There's no ego attached here. I'm here to learn from the market and try to take what I can. So, there you go. So with regard to ETH, where do I have the market slash resistance? The most immediate level, as you'll have seen moments ago, is basically this highest close, lowest close consolidation here, which also fell into the origin, or the origin of the sort of bear market move, with the last real base before the drop falls in at a similar technical level. And that's kind of where I've got ETH closing at right now. So kind of the 450, or at the extreme of resistance, 470. That's where I've got resistance. So looking at space is something I like to do from a swing trading perspective, and immediately this jumps out at me. A whole lot of nothing between, let's round up and say 500 and 700, and even measuring that in percentage moves, and let's be generous and kind of take the top level to the top level. You know, 41% in ETH unleveraged, and assuming that, you know, maybe it would spill over to DeFi and other opportunities, that is plenty for a, even unleveraged, but of course it would be leveraged, swing position. So from a high time frame blue line chart, whatever nonsense point of view, the bullish idea would resemble something of the following. Again, the diagram is purely illustrative. I think it's illustrative. It would look something like this, right? Either way, the significant event would be a break through the upper boundary of the 470s, right? And that would likely trigger in one way or another continuation towards 700. Now again, it's not always fast moving. That's why I don't like squiggly lines. They always do something like this. And like a normal squiggly line chart will look like they have the line and then they'll do this and then the squiggly looks like this. And it looks really straightforward, right? You've got price moving into a level, it hits the level, it reverses off the level. Fantastic, right? It's like taking candy from a child. Or sweets from a child, because British people aren't supposed to use the word candy. The issue is, this bit of the squiggly line, which in the diagram is the least consequential, is actually the most consequential for your trading. Because you could potentially be spending, if you're trading high enough time frames, like literally weeks at the level before you get the high time frame move. Famously, Bitcoin at 10.7, we spent like 2 full months or 3 full months in the $3,000 price range before moving from 10.7 support to God knows where resistance. So that's why squiggly lines aren't helpful. The timing aspect is essentially completely ignored by such diagrams. So when I do anything similar or anything comparable, when I draw stuff like this or stuff like this, etc., the main things I'm trying to convey are structure and direction derived from structure. Timing is something you can't really convey particularly well using these sorts of rough illustrations, squiggly lines, whatever. But the basic idea is, again, the last bastion of resistance for me is around 470s, which is the upper boundary of this consolidation and kind of lands at the top of the consolidation preceding the bear market. So if that breaks, I really think that's equivalent to Bitcoin breaking kind of 13K, if you will, the clear skies argument. And for me, the clear skies equate to about 40% towards 700. What's the bearish case? It's reasonably hard to come up with one. I think the pullback case would be the market finding resistance at this cluster, whose lower boundary lands at, I think that's 450s. That would be suggestive of a pullback towards around 400s to retest this whole kind of under-over structure that we've had in recent weeks. But if we're talking a Bitcoin-esque pullback argument towards 300, I think that idea, again, where is there space? 400 fails, I think 300. 470 fails, I think towards 700. Where we are right now, again, low conviction, but still technical resistance around 460, 470. And that's kind of the best I can give you from a high time frame point of view. In a similar way, what would those red flags look like? Well, look, the reason I'm not terribly optimistic on ETH BTC is because I think resistance on ETH USD is slightly better / clearer than resistance on BTC USD. Plus, if we're going beyond the charts, I think if we're assessing the veracity of fundamental narratives, all the institutional whatever adoption type of arguments are currently in their current form in terms of capital allocation being made towards Bitcoin and not Ethereum. Now that doesn't mean that once those people get a taste of crypto, obviously altcoins is where you FOMO in next, but for I think the short-term cyclical implications, and the charts have been reflective of that, suggests that Bitcoin is the preferred play, macro if you will, rather than Ethereum for the time being. But that's subject to change as always. Final note on ETH, we talked on with Bitcoin about some potential red flags, right? What would short-term weakness look like? ETH in the same way has been really fantastic with market structure. So, if something's working bullishly, that bullish market structure's intact the whole way and the market's been bullish, I'm going to give a lot of weight to the stuff which gives reliable and accurate information. So in the same way, I think the conservative red flag would be a lower low close on ETH here around the 435 handle, because again, it really hasn't happened on the way up. We just keep making higher lows and higher highs. So if I get this, even this short-term structure break, something like this, coming off, again, additional context, coming off the extreme of high time frame resistance into high time frame resistance into a daily market structure break here, I think in the short term, that would be suggestive of a pullback towards 400, and then I think post 400, or if you want the kind of late, more confirmed entry, I really think something like this would be reasonable. The support structure, which formed the low of the breakout, all this kind of crap, basically the 370, 380 level, there might be a kind of bread and butter break and retest setup there as well if this thing really starts to unwind. But again, as before, we're kind of doomsday prepping to some extent. Yes, the market's at resistance, but until these lower time frames start to somewhat align with that, I won't have anything actionable. So it's bullish until X, and I think the until X has been made reasonably clear for both Bitcoin and ETH. Or I suppose to paraphrase, the way I look at it is, if higher time frame resistance from the monthly and weekly is going to do its job, the least I can demand of it as proof, or from it as proof, is a daily break in market structure. If you're going to try to convince me that the market, that weekly or monthly resistance is going to do its job, you're not going to have a good time convincing me of that if you can't even make or convey or form a lower low on the daily time frame. For me, the time frames flow together. If you're arguing higher time frame strength, I need to see, higher time frame weakness, I need to see cracks in the armor on lower time frames, right? Excuse me. Pony PlayStation. No, sorry. Pony Slay Station. Pony Slay Station. Do you plan on talking about DeFi alts anytime in the near future? Yes. Next week, unless the market goes absolutely berserk, I've created a watch list called DeFi Blue Chips, where we've got Yearn, Uni, Aave, Synthetics, Band, Sushi, and the perpetual kind of DeFi index from FTX. So once Bitcoin and other stuff becomes marginally less interesting, or basically when we have more time, I do intend to cover this somewhat regularly for you, if there's interest, assuming there's interest. One other thing with regard to altcoins, you should definitely subscribe to the channel, not only because, well, it's important. I hope you like the video and subscribe if you haven't already. Why don't you do it right now while I'm rambling? I'm looking at the like counter, make it happen, blah, blah, blah. But on a serious note, regarding altcoins, we have Not So Fast coming on Casual Friday, this Friday, actually. So when it comes to altcoins, there's really no one better, in my opinion, to give a kind of holistic, historical, practitioner's view of altcoins. I don't think anyone can do it better than Not So Fast, so I'm excited to speak to him this Friday, and I'm sure he can answer all of our questions about them while he's here. So that'll be a good one. Other stuff, talked about Bitcoin, talked about ETH, the kind of higher time frame stuff. Let me go back to my normie chart. Let's see if the chat was right. Well, we've got a bounce so far. Okay, let's see. Some of the other stuff we typically look at, yeah, ETH BTC. Again, I think ETH looks slightly worse, the USD pair, than BTC USD, although both are arguably at resistance, or what's left of resistance. I just think ETH looks a little bit worse for wear. ETH BTC is, for the moment, supportive of that view. But, again, we've got a weekly and daily level of market structure or support here. So this is probably not, at least in my system, the most reasonable place to turn full bearish, but we'll see how this evolves, right? You can just see it's technically at support for the moment, but the USD pairs, yeah, not amazing. Link is an interesting one. It keeps flirting with levels that we talk about. Oh, Link USD, there you go. Let me have your... Nomad wants 50 BTC to come on a podcast, and I can't quite afford that for a guest, so... Hey Cred, what trade journal do you use? Oh god, it's a mess. I've got a Discord server just for myself where I post stuff, and I've also got a handwritten journal as well for kind of observations and postmortems and stuff like that. It's a bit of a mess, but it kind of, the chaos works. Yeah, nothing really changed on Link. Again, our basic thesis was that we've got a nice cluster or old range whose upper boundary lands just under $14 at 13.8, and the easier trade on the table is continuation through that structure into basically the highs. I think we'll really pick up some steam should that happen, and for the most part we've been hitting the lower boundary, no daily closes above, and been getting rejected. So nothing really triggered there for now. As you can see, yeah, not great. I don't think Hisaka would do so. He's quite a private person. Don't think he's the type of, despite being a close, long-standing friend of mine, I don't think he'd come on something like that. Here's Link BTC as well. Potentially looking bouncy. It's this kind of complacent drop into an extreme of support, having some wicks come in as well. So a bounce from here wouldn't be terribly unreasonable. But again, given how Bitcoin has been acting, it's a very tall bar for anything to outperform it. So the fact that high time frame support is held on an alt BTC pair, despite how Bitcoin has been performing, that's pretty commendable in itself. But again, I think the easier trade, well, two things. The easier trade will be probably on the USD pair through 14k, that kind of continuation, old range reclaim. And also on the BTC pair, I still quite like this as a do or die level, but I definitely wouldn't be a fan of holding it offside, given I think there's a solid 30% in the tank should this level fail. So worth being aware of. Just to round up, YFI looks fine for now. This short squeeze seems to be more than just that. It's developed structure since then quite nicely. This consolidation, upper boundary has been reclaimed as support, and as long as that holds, and that's kind of the, I think, the dip buying, the first real pullback or dip buying level, 15k makes sense, and the objective for any move through there would be the old range at 22s. And I think a similar thing can be said for Link in terms of for Yearn in terms of structure, as was said for Link, whereby the reclaim of the old range is probably the easier trade than anything else. So yeah, as long as support doesn't break at 15, looks fine to me, right? Just consolidation after breaking above most of the reasonably important levels. In my view, if it pulls back, your kind of do or die risk-defined long is as close as possible to the level itself. I wouldn't hold it from range high to range low. It just doesn't make any sense. That trade would suck. If you're not a fan of this and don't want to stomach it retesting, etc., and just want to catch a quick leg of momentum, I think through 22s is what's available. And Litecoin, because that's popping. First of all, the Bitcoin pair. Well, looks like it's retesting resistance of some sort. Don't exactly remember where that comes from. Oh yeah, okay. So it's this pre-all-time low breakdown cluster here, currently being retested again on the Bitcoin pair as resistance. And again, it's really, just look at this trend, right? This thing looks rough like a dog's dinner, and it's important to hold, like, it takes a lot to reverse high time frame trends. So the stronger the trend and the higher time frame it is, the more kind of evidence you need that this is a reversal as opposed to a bounce. And this, at the moment, in the grand scheme of things, isn't enough to convince me that this is over necessarily, right? I think that's reasonable. At least in the short term, we have a old level of support close to 46s. So if you're a Link Bitcoin trader, or if you're considering whether to allocate any of your portfolio to Link over Bitcoin, again, you want Litecoin. Have I been saying Litcoin this whole time? Have I been saying Litecoin? I think I've lost my mind. Have I been saying Link, Litcoin, or Litecoin? Anyway, gosh, I'm really losing it. Let's say you want to get long Litecoin. In order to justify that, assuming your portfolio is denominated in Bitcoin, you'd want to see a strong LTC BTC, because you want being long Litecoin to outperform simply holding Bitcoin, right? That's an important consideration. So in the short term, there's structure at 46s. If it breaks this resistance, I think at that point we will have re-entered into an old range, which may have some upside. But for now, this exact candle on the weekly time frame, again, it's a weekly chart, so this could take some time. I'm not chasing this per se. Litcoin, yeah. It's only Litcoin when it goes up, I suppose. As for the USD pair, and also I mentioned, why is Litecoin going up? Well, because people are buying it. But I think also there's the PayPal effect to it, potentially. This is pure speculation. But I think it is one of the cheaper coins available on the PayPal kind of spectrum or offering, right? So who wants to buy a fraction of a Bitcoin and one of them costs, 17 grand, but gosh, I can buy a lot of Litecoin given it's only, $70. I think that might have something to do with it, although that's quite speculative. As for the USD pair, how does it look? It's okay. I don't know, it's moving sideways, right? If we take even on the monthly time frame, if we take the range, the highest close and the lowest close, it's kind of towards the upper boundary right now, so you might derive a stronger view on the monthly close, right? Something like this would probably not be the most unreasonable thing in the world if it sets up, right? I think that's probably the clearest view that I can offer on the high time frames. Let me just re-add that again. Here we go. Top of the current range, bottom of the current range, and you are here. So something like this would make sense. But again, from a portfolio management point of view, if you will, the Litecoin Bitcoin pair probably needs to do some numbers as well to convince me of this setup. As for this current chart, just doesn't really jump out a whole lot necessarily. I'd rather give precedence to the monthly time frame here. It purely strictly speaking, it's a weekly time frame breakout if the weekly closes like this. So there may be, if there's momentum in this thing, similar to the monthly, just on a lower time frame, there could be something like this available and just going towards the highs and the bases. But yeah, not something I trade. I don't remember the last time I traded Litecoin, actually, so not going to have strong views there. Weekly, potential break in market structure, and at that point, your trouble areas are the highs and old levels of support and resistance. The Bitcoin pair is bearishly retesting for now, so yeah. Yeah, the whole altcoin question raises a very interesting point. If your portfolio, and this is something I discussed with Donald and discussed with all our guests, and I'm still fascinated by it, the fact that we are spoiled for choice when it comes to exchanges and the pairs they offer, and the ease of moving from Bitcoin to stablecoins, and the range of instruments you can use as collateral, all that kind of stuff, affords you a lot of choice. So if you are, for example, trying to beat Bitcoin or using Bitcoin as your benchmark, or you're a Bitcoin denominated, if you will, trader, then if you're trading altcoins, they need to be bullish against Bitcoin. So the alt BTC pair needs to be bullish, even if you end up, in my view, trading the USD pair. Because if the altcoin you'd like to trade, or long specifically, can't outperform simply holding Bitcoin, which you're already doing as a function of your net long position or your portfolio being in Bitcoin, then it just simply doesn't make sense to take that additional risk and put that trade on, right? That's even assuming you win. What if you lose, right? It just doesn't make sense to get involved in that trade. But if you are, say, a big kind of linear futures maximalist and stablecoins maximalist, and you're not kind of net long Bitcoin and you view everything in USD, then looking at those stablecoin margin pairs and trading them as they are on their technicals just simply makes sense, right? So it kind of depends, what's your benchmark, what are you trying to outperform, and how's your portfolio denominated when it comes to altcoins as well. We'll finish off with XRP BTC. Did this hit 1527? 1558. Oh gosh. Yeah, so for this, I think in the newsletter we've got this down candle as the cycle low. So it looks like we came really close to the range low. If that's the bottom, it may just retrace towards the range high, right? I think this lands at around 27s. No, it doesn't. Around 1900 or whatever sats. But I don't really have strong views with the BTC pair. Again, if you look at the trend on this thing, lower highs, lower lows have just been breaking down. So it's important not to give too much weight to lower time frame breakouts. But I can see why you're asking me to chart it, because in literally weeks, you're getting the first tentative signs of strength in the form of a higher high on the daily time frame here, and you'd want the low to hold and a lower high to form somewhere on the dip, which would ideally, in an ideal world, retrace much of this. I don't know. I'm not terribly convinced. If you want a more reasonable view on XRP, BTC, the newsletter is your best guide there. And again, generally, the same presumptions apply. If we're dealing with high time frame trends, they take more to reverse. So that's why I don't generally jump on board the first green candle in a high time frame dominant trend, because a lot of the time it just doesn't mean anything. I don't think I'm dismissive, Joker. I'm just not very opinionated when I don't have strong views about something or reasonably clear views about something. I think that's different from being dismissive. I'm not saying, oh, XRP is a scam, I don't care. I'm just very guarded with my conclusions, given my familiarity with the instrument and also the current trend that's intact. I think that's fair. Yeah. That's the BTC pair, and we'll look at XRP USD. It looks all right, but again, the proximity to high time frame resistance is worth being aware of, right? In the form of the old range low, you could use whatever structure you want to kind of delineate it. Around 0.3, that's just something to be aware of up here. I think generally with altcoins, Donald is your kind of capitulation, spring type of guy. And I'm more on the momentum continuation, break a key level and just get on board and ride into the sunset sort of person. So just like with Litecoin and with XRP, when I see this sort of thing, proximity of price to high time frame structure, which generally seems to be doing its job quite well, I'll always be careful. And I'd rather pay up for an entry to take the other side rather than long into resistance than assume that alt season carries me further. I don't mind having a worse entry, but with more evidence or confirmation, if you will. Okay, that's all I've got. That's all I've got for this Monday. As always, the live streams are replayable. So if anything didn't make sense, which is very likely, be sure to watch the replay or just leave a comment. I'll try to get back to you. And I always read all the comments. Of course, thank you to Bybit for sponsoring Technical Roundup. Make sure to show our sponsors some love and support for making this available, and their links can be found in the description below. The newsletter comes out tomorrow at 8 UTC PM. That is also free, courtesy of Bybit, so make sure to head over to technicalroundup.com and sign up to that. Once a week, no spam, no other emails. We are very good with all of that stuff. And lastly, I am immensely grateful for over 200 likes on this video. You guys are fantastic with that. Thank you very much. It does mean a lot. I hope you've had great and restful weekends, that we have good stuff with the market coming up. And let's go onwards and conquer, as they say, God knows where. Grateful for your attention and time as always. Take care, gents, and I will see you on Casual Friday for Not So Fast session. Take care. Bye-bye.